Cook has been watching every move the market makes at Bell Direct. Welcome to you, Jeremy. Those retail sales numbers, just one of a slew of data, bits of data to digest.
Good afternoon, Carson. Yeah, there was quite a few bits of information out today. I guess starting with the good news, and we had the Westpac Melbourne Institute Consumer Confidence Index coming up with a gain of about 5.2%, recording its best figure since around about July 2007. So some pretty good indication there about what consumers expect future economic conditions to be and how they intend to approach their household spending. I guess also that's on the back of what we saw yesterday with the better than expected NAB Business Confidence Index results coming out at a 6-year high. On the other side, though, we had some various items coming out from the ABS. Firstly, their retail sales figures for July came in with a drop of around about 1%, which was against expectations of a gain of about 0.5%, and making it back-to-back months where retail sales had dropped off after a 0.8% drop in June. I guess it is showing that retail sales as a whole is starting to drop off. Over the last year, though, retail sales did increase by about 5%, I guess illustrating the impact that the government stimulus did have. We did have Access Economics coming out to say that their, I guess, predictions for future retail sales were going to be fairly flat, with a 1% gain in 2010, 0.8% after that, and only returning to a strong level of growth of around about 3.7% in 2011-2012. I guess when retail sales, when you consider that it's counts for around about 25% of Australia's GDP and provides around about 15% of the jobs in Australia, so it's fairly important. And obviously, if that's starting to limp along, it's going to be a fairly large drag on the economy. We also had the value of new home loans that dropped by around about 2%, which was its biggest fall in about a year. Obviously, we had tax breaks and lower interest rates and various other incentives in the first half of the year. And I guess similar to what we're seeing in the retail sales is without that artificial incentive, figures there are starting to drop off. We also had...
Yes, but do we know from that figure, and this is the discussion, Jeremy, admittedly, we don't know whether it's simply a lack of investor appetite or the banks not lending as willingly as they might once have.
Yeah, that's true. That's probably out of the information out today. It's probably one that you'd have a bit of a question mark over, as obviously with the banks probably tightening up their lending restrictions, and obviously also with, as I said before, with the incentives provided by the government, that might not provide an accurate indication of what consumers will be expecting to pay for new homes without, I guess, without that incentive. So as much as you can look into it in terms of what expectations the consumer has for the future in terms of the sentiment, obviously we saw with the consumer sentiment figures that the expectations for the future are looking pretty good. And I guess with the other result coming out today, which was investment lending, which was also down around about 4%, I guess the good news to take out of all that is that the disappointing figures are those that have occurred in the past, whereas the outlook for the future with the business confidence survey and the consumer confidence outlook is looking pretty rosy at this stage. Obviously, we did have the Australian GDP looking like it's growing around about 0.6% over the last quarter. I guess we've got employment figures coming out tomorrow, so that's probably going to provide a bit more indication of where we're at. And obviously next week, I guess all eyes will be on the RBA minutes and see what can be gleaned from that.
Well, indeed, because they have reinforced that we've been in Armageddon zone territory with rates as low as they've been historically, but also it's mindful of that delicate balance to be struck. And yet the markets were selling today based on, well, if it's retail stocks, well, they're not in favour, at least in the short term.
Yeah, I guess we had a pretty solid start today with a solid lead with the Dow Jones up around 56 points overnight. We started off in positive territory, but once we had that, I guess, worse than expected economic figures coming out, the market turned south. We ended up behind by around about 0.7 of a point, so not a lot of, I guess, direction from the market today. Also, we had the US futures pointing to a loss of around about 35 points. That didn't help the cause at all. But we had resource stocks started off pretty well with commodity prices doing well overnight. BHP and Rio were both up over 1% at one point. BHP ended up 0.3%, Rio ended up 0.7% stronger. Oil had another good session overnight. It was up 4.4%, trading above the $71 US a barrel mark. Oil Search was up 0.2%, but Woodside, on the other hand, it was down 1.1%. I guess echoing what we saw with BHP and Rio was trading pretty well early in the session, but then dropped off. Banks were mixed. We had NAB and ANZ. They were both up 1.1%. Westpac was down a similar amount. Commonwealth was down about 0.4%. We've got gold fever still it's continuing in the market at the moment. We've got gold hovering above that $1,000 US mark. We had Newcrest up around 1.5%. Lahire was steady for the day. ABB Grain, their shareholders voted in favour of a takeover by Canadian group Viterra. That will create a company worth around about $4 billion. Their share price was up 1.4% today. Tas Group also performed quite well today. They were up around 3%. This was on the back of the New South Wales government saying they were going to put up the New South Wales lotteries for sale, and I guess Tats are the front runner to pick up that prize there. We also had Paladin coming out saying they were looking to raise potentially up to 15% of their issued capital with the capital raising, which they'll be using to fund projects and I guess build a bit of a war chest in case any possible acquisitions come up. And Jindalby also had a good day today. He was up around about 5% with getting approval from the final approval from the state government for its development of its Carrara iron ore project in WA, and just waiting for federal government approval to finish that off. So overall, pretty disappointing day in the local market with 3 consecutive days of gains coming to an end.
Jeremy, when you look out to Friday, when we get Myers results, and you put into context today's read on retail sales, good time to hold an IPO or not?
I don't think it's a bad time to be getting back in. Like I think, as we said before, like obviously retail sales has dropped off a little bit, but when you look over its performance over the last year, gaining 5%, it's a fairly impressive performance, I guess, when you consider the sales figures that you'd be seeing around the world. So I don't think it's the worst time in the world to be involved in an IPO.
I think that was a very accurate answer, because I drilled down into those retail sales numbers and it's obvious that we spent less on food, clothing and household goods. Those sales at department stores did fare better. They will be looking at that number, have no doubt about it, and rubbing their hands and pondering. We'll wait with interest Friday. Jeremy, for now, many thanks.
Thanks, Carson.